Henry, I am excited for this. You don't know this, but I'm like the biggest fanboy of ZoomInfo's journey. I've been looking forward to this for a while, so thank you so much for joining me today.
Absolutely. Thank you for having me.
Not at all. Now, this direction of conversation is going to go in a couple of different ways, but I want to start on the founding story. How did you come to found the incredible brand that is ZoomInfo today?
Yeah, so this started when I was in college. I went to college in Las Vegas. When I went to college, I grew up in a pretty sort of middle-class family. My mom was a nurse. I was raised by my mom. She was a nurse. She worked 3 jobs. When I graduated high school, she gave me $5,000, which was the remnants of an old life insurance policy. And she said, here's your college fund, good luck. So I went to college. I ran out of that money my first year, and I went searching for a new job. So I applied everywhere around Las Vegas, and I ended up landing at this small SaaS, early stage SaaS company. It was the founder and one other person. He was looking for someone to do administrative work. This is 2002. And he sold an annual subscription service to a database of basically reports on the information technology departments of large companies. And then he would send out a CD that had all the reports to these companies. And so I got this front row seat at a super early entrant in SaaS. It was 300,000 in revenue between 02 and 06, we grew it from 300,000 in revenue to just under 5 million in revenue. The business was 5 million in revenue and doing 4.7 million in EBITDA. And so there wasn't much of a business. It was this incredibly high margin company without much of a business infrastructure. And so I left the company and I went off to law school. And after my first year of law school, a friend of mine and I said, hey, why don't we start something that's like that, doesn't directly compete, and actually build a business around it. And we knew there was a market there. We understood how the business operated. We knew there was a large total addressable market. We knew what the product market fit looked like. And so we said, it won't be that hard to be better at the business side than the company we worked at in college. And so we did. We went out and we started building what was at the time, Harry, called Discover.org, which is probably maybe the worst name in business history, because people would call it Discover and Discover.org and Discovery and Discovery.org. So we started off in 07. I put $25,000 on my credit card. He put $25,000 in his credit card. This is 2006 Columbus, Ohio. And so there's no VC funding or VC appetite for these types of companies. So that was all the funding we had. We grew the business without any outside investor through 2014, where we were about $30 million of ARR, profitable, and brought in TA Associates as a private equity investor in 2014. And that's where I'll pause the story because I think the rest of the questions
I mean, there's so many things I want to unpack. I do want to start there. You mentioned your upbringing. You mentioned your mother being a nurse, having multiple jobs. I always think that we're a function of our histories in many ways. And that separates into, first, what do you think you're running from, Henry?
If I'm running from anything, it is... I don't know if it's running from, but when I was young, I really did believe that I could do anything. I could be anything that I wanted to, that if I worked really hard and set my mind to something, that I could achieve it, which I didn't appreciate. Everybody didn't feel that way. I thought that was something that everybody just intuitively knew. And so I guess I'm running from anything that is not meeting that full potential.
Can I ask you a weird question? I always had that same feeling of the inevitability of success. I wasn't sure how it would come, but I just knew it would come. But I do doubt myself, and I have doubted myself. And suddenly that, obviously it will come. Suddenly it goes, what if it goes wrong? What if I'm not as good as I think I am? Did you ever have that?
Oh yeah, I have it today, all the time. And I think part of it is, I think what you're saying there, I think when I think about that, it's what if I don't reach my potential? Yeah. What if I do something that robs me of reaching the potential that I had that was navigatable? I think that's the big fear is, hey, I believe, you and I believe that we can be much more than we are today. and we can see it. And what if we don't reach it because of something that we could have overcome? That's the real fear, that we could have learned, that we could have paid more attention to, that we made a bad decision that took us away from. That's the big concern. It's not that we're not capable of it. It's that probably we make the wrong decisions on our journey there.
I totally agree. I recently stopped drinking because I thought I lost 25% productivity a year, and compounded over 25 years, I would be fucked.
Yep.
Okay, so I actually spoke to some of your colleagues and friends, and they said that your more humble upbringing, not being born into a life of great wealth, actually gave you a mindset of frugality building the business. But in some ways, it prevented you from going for all-out growth early on. Would you agree with that? And how do you think your humble upbringing impacted your mindset to growth?
Yeah, so I don't think of it so much about my upbringing. I think of it like when I worked at that startup company in college, one of the things I learned was just what do you do with resource scarcity? So there was this moment where I met the founder of that company. We actually acquired that company in 2015. But the founder of that company, his brother was like this big sort of grow at all costs VC guy. And we met him one night, and it was me and the founder and his brother the VC. And his brother, the VC, goes, "Why are you not investing in this business? It's just resource starved. Every dollar you put in, you're generating, hundreds of thousands of dollars on the other side. Why are you not just aggressively investing in this thing?" And when we walked away from that conversation, the founder said to me, he goes, he's always like spend. I like a business that's resource constrained because it ensures that the next investment you make is always the most important investment you can be making. And it was like, okay, I get it. There is like a continuum there where it's like you're not investing enough to where you're investing way too much and you're getting sloppy with it. And so I think what was instilled in me was good businesses run profitably. And you're just not really a real business until you can figure out a way to be profitable and run a business. You can't just always be fundraising the next dollars to fund your operations. So I always believed that a good business should be run profitably. I also didn't have access to the capital markets in 2007, 2008, 2009, Columbus, Ohio. So there wasn't really an option to run the business in a non-efficient, profitable way. And so I think that was more the driving factor than the upbringing part.
What worries me more is if I look at today's environment and I place you in it at the start, you would have got venture funding very easily and you would have got a lot of it. Do you think you would have charted your course differently had you had a lot more money a lot sooner?
So one of the real benefits of my journey is I started at 23. I didn't get any outside funding till I was 30. The business, we didn't do any really big M&A until I was 33. And so I had all of this time to mature and grow as a leader and build an executive team and build the foundations of a good operation and bring in a CFO. And I think if you rewound back to 2014, where we took our first outside funding, or even earlier than that, and you said like, hey, here's $40 million, just like go spend the $40 million, I would make a tremendous amount of bad decisions along the way. I wouldn't have been as grown up and mature of a leader as I've become. And so the benefit of time has actually, like the benefit of not being an overnight success, but being more like an overnight success 15 years in the making, I think has been beneficial for the whole business and definitely beneficial for me. When we were going on the IPO roadshow, I remember I sat down with this one set of investors and they had printed out all of these like Glassdoor reviews. By the way, we have a really great Glassdoor rating and really great recommendations of me and the employees, but they obviously not interested in those ones. They want to talk about the bad ones. And so they pulled up the bad reviews and they were like, hey, so we read these bad reviews, some of them would say that you get like really angry and like, what do you say to that? And I was like, I founded this company when I was 23. we had hundreds of employees by the time I was 28. And you want to take like a snapshot in time of my leadership capability and ability and style and, lay it upon me like 7, 8, 9 years later, that's just not like it's not really realistic. It assumes that I haven't evolved or learned at all over those years. And if you talk to anybody around me, I think what they would tell you is I'm a very different leader today than I was 5 years ago or 8 years ago or 10 years ago. And so I think the opportunity to evolve makes you more likely to spend that VC money and grow your business wisely.
This is so hard. What do you know now that you wish you could tell your 23-year-old self founding the business back then?
Believe in yourself. Like probably the biggest thing I would say is along these lines is don't worry about what the Silicon Valley companies are doing. You're charting your own course, it's unique, and it's gonna be rewarded. Just have a lot of confidence in that. Because to your point, Harry, like when we were growing, it was really easy to look at like what was happening in San Francisco. We grew the business in Portland, Oregon. But it was really easy to look down in Silicon Valley and see what, how the VCs were funding Box and Dropbox and all of these kind of like darlings of the like early 2010s. And then just look at our business and go like, yeah, it doesn't feel like that. Like why doesn't it feel like that? And then be really hard on yourself for not growing it profitably and growing it as fast.
Do you know what? If there's anything we've learned from FTX, it's that being on a magazine cover does not always lead to success, Henry.
Yes, 100%.
So I think it's fine not being on it. But you mentioned bringing in the exec team around you and kind of fostering that culture. I honestly hate the word culture because it's so misused and kind of fluffy. But I think it's important to start at home. What type of culture are you fostering within your own family?
Yeah, I think probably the biggest one, or the biggest thing that I'm fostering in my family is nothing comes easy and practice is everything. And so my daughter, actually the one time I made my daughter cry with words, only one time. And we were driving in the car. We had like a 2-hour drive. And she was talking about one of her friends who's really great at soccer. And her friend is like 4 years older than her. She's been on like a club team. She practices 3 times a week. She's really like great at soccer. And my daughter goes, and my daughter's like never really played soccer. And she goes, Daddy, I'm better than Colby at soccer. And I was like, that's ridiculous. You are not better than Colby at soccer. You could be if you practiced as much as her. She goes to practice 3 days a week. She's on 2 teams. She's been doing it for 5 years. I'm sure you could be as good, if not better than Colby if you did all of that. But you're not just like out of the gates better than Colby. That makes no sense. And she started crying. And my wife was like, whoa, take it easy. Like, you don't have to be like that hard on her. But in my head, it was like, listen, she's got to know that like you don't just walk into situations and expect to be amazing at them, but that you have to work really hard and practice and put in the time and effort to get really great at things. And so I like beat that drumbeat constantly. The other night, probably a couple weeks ago, my wife bought this like embroidery machine, and it comes to the house and I'm like, oh, that's gonna suck. Like, you're gonna really need to learn how to use that thing. It's not like out of the box, like touching, easy to use. And my daughter walks in and she goes, Mommy, don't worry. If you practice really hard and you spend a lot of time doing it, you'll get better and better and better at it. So you just gotta keep practicing. I was like, okay, great, that's landing. It is landing. So I think a culture of like hard work and practice leads to better outcomes is, the number one thing that I'm trying to instill. At the same time, like she's growing up very differently than I grew up, and not her fault, but like we spend the summers in Boston where half of the ZoomInfo team is, so we have a house there and we have a house here, and we have house cleaners. We didn't have house cleaners growing up. And so really explaining to her where the lines are, like, hey, you don't tell your friends, hey, my house in Boston, my house in Vancouver, my vacation house. Like, people don't have that. You're in a unique situation. You have to appreciate the uniqueness of that. And don't, when you talk about those things, it can be heard in a negative way. And you don't have to be embarrassed about it, but you also don't need to like talk about it in a way that feels like you're flaunting it. She understands that now pretty well. And so making her appreciate it.
What's the most challenging thing about parenthood and fatherhood?
I think there's a bigger question, which is I work really hard to be the best dad, the best CEO, the best husband possible. Those are like kind of the three things. Then I have to find time to be like the best to myself. But those three things are always stealing from each other, right? Like more time at work, less time at home. Or more time being a great CEO, less time being a great father. More time being a great father, less time being a great CEO. More time being a great husband, less time being a great CEO. And so the hardest thing is building a framework that says, in order for you to be a great father, this is like the minimum necessary time and involvement that you need to be doing. Don't ever fall below that. And then always look for opportunities to do more. And so I put that in place in the way that I interact with my daughter and my family. But that's it's challenging. It's always challenging because left to my own devices, ZoomInfo would take all of my mind share, 100%. It's very selfish.
I always say when you're winning at work, you're losing at home. And when you're winning at home, you're losing at work.
Yeah, 100%. You have to figure out a way to get them both going. That's the magic.
You absolutely do. I can I ask, you mentioned there about kind of the practice and the hard work and then seeing outcomes. How do you think about kind of culture then at work? And is it the same values that you instill from family values that you instill at the workplace?
Yes, absolutely. I think, look, here's the interesting thing about culture. And I've read the books and we've talked about Frank Slootman and Snowflake. And I think the hard part about culture is like, you read Frank Slootman's book and you walk out and you go like, okay, take the slack out of the rope. It's like, okay, I don't know really what is
war, bring your spear, kill someone.
100%. And that is like the feeling. But like, what do I do with that? Like what do I come into work and change and do? That's the hard part. Like we have a mantra that's get 1% better every day. That's a great part of the culture, but what are you doing to make sure everybody appreciates that and is looking for opportunities actually to improve? I think the hard part about getting at culture is I can describe it to you, but what it really takes is really great questions about how the company operates and how it makes decisions that really can tell you the cultural story. The easy thing for me to tell you is it is a culture of constant improvement. You can't improve unless you have data that tells you how the business is operating, and then and then look for improvement against those. Ask questions about, hey, why is this worse than it was last quarter? Why is this worse than it was last year? If this is improving, why is it improving? Are we sure that the investments that we made behind it are what are driving the improvement here? And that goes back to how you invest in the business and how you look for returns on the business. But I think the biggest thing about our culture, it is a culture of constant improvement.
Can I ask, there's trust and there's safety. And I always thought in teams, you needed both, actually. And Mickey from Volt, this very famous European company that sold to DoorDash for $8 billion last year, said, bullshit, you don't need safety. I trust you, Henry, but no one's safe. Not
yeah.
Do you agree
100%.
With that?
Yeah, 100%. 100%. Yes, I trust all of my executive team. I trust that they make the right decisions. I trust that they're focused on the business. But if nothing goes right for 4 quarters in a row, or all of the things that we were trying to achieve are not achieved, it doesn't matter that there's trust. Like, your safety is in your performance. That's it. That's where you get safety. And I think that is actually misunderstood, which is people are like, oh, it's like, it's a hard charging environment And so I always have to look over my shoulder in case like, I'm going to get fired or whatever. It's like, but that's not the case in any like hard charging environment. I think the reality is performance is what creates safety. And what you got to make sure of is that you're aligned on what the performance expectation is. And so if we have a conversation and I say, listen, here are the 3 things that I expect from you, and then here are the metrics that I'm going to look at. Your ability to impact and drive those metrics, that's your safety. I don't care how you do it. I really don't. You may come to me and say, hey, Henry, listen, these metrics are really important. I'm not resourced properly to get to those metrics. But if I had an additional 5 headcount here or 10 headcount here or whatever it is, I can meet those metrics. If I don't, then the closest place I can get to your metrics is this, this, and this. What do you want? Do you want me to get this close to the metrics, or can you give me the additional headcount and spend so I can hit those metrics? But being aligned to the metric and making sure like, hey, if I deliver against this metric, that's the safety. How I get there, that's the trust.
I asked earlier, what are you running from? I was the fat kid at school with no friends, and it impacts my ability to be a leader because I just want everyone to like me. And so I struggle to deal with underperformance. So going to your point there of, okay, here are the 3 things. Henry, I'm sorry, I've missed all 3 things. How do you deal with underperformance in the right way? Because right now I'm too soft.
Yeah, so I think I talk about it a lot. No one's ever like surprised that they're underperforming. And so you're seeing that happen. Quarter 1, it's missed. Quarter 2, it's missed. By the time quarter 3 or 4 comes up, it's like, hey, listen, maybe it's not working. And at that point, actually the conversation's not that hard. As long as you're constantly talking about the things that are not working and trying to help them achieve it, right? Like I'm in this game, right? When things are not going right in engineering or product or sales or wherever it is, I'm totally in the game with my leaders and trying to support and figure out how to fix things and get them on the right track. If ultimately it doesn't work out, everybody knows that it's not working out. They're not caught off guard.
Yeah, I think where you have the surprise, you have the problems. We mentioned a lot about kind of how your family values have instilled into your work values. In terms of actually your takings from your parents, what was the single most important thing that your parents drove into you at a young age?
Just hard work. My mom worked 3 jobs growing up. There was almost there was never a day she wasn't working. Like a day off was an 8-hour day. And so I think I felt obligated to work just as hard as she did. And in fact, in the early days of success at ZoomInfo, I always felt kind of bad about it. I was like, people would be like, man, you work really hard. I'd be like, I worked 11 hours today. My mom works 16 hours on a normal day on her feet in a hospital. This is not really hard work, yet the outcome on the other side of it, way outperforms what my mom was doing. That always felt unfair, just unfair.
I would always say the same. People always say, oh, Harry, you're going to burn out. I'm like, my grandfather shovels gravel on a golf course for $8 an hour at 80. I have an EA bring me a macchiato at my nice desk 100%. And a cashmere jumper. Not really. Do you struggle then with this entitlement culture and this anti-hustle, let's have Fridays off every other week? I'm just fucking pissed off about it. I'm like, I'm sorry, no. You want to be great? Work hard.
I do struggle with that. I have forever, by the way. It's just the noise to signal ratio has amped up over the last few years. I really believe that my success is attributed to how hard I worked in the business. And that not just the business, but growing up, in college, in law school, I always told myself, listen, I remember walking into law school and I all of a sudden was surrounded by a bunch of people who went to Harvard and Stanford and Berkeley. And I was like, okay, all of them are smarter than me, but I need to outwork all of them, because if I outwork them, I can outperform them. And I did. That worked for me. And then in business, I felt the same way, like just outwork these people, out hustle these people, and then you will win. And I also think it takes away, that's a pretty shitty reason to not succeed. I didn't work as hard as the other people. And I don't want to wake up and go like, oh, you know, I didn't succeed, but geez, if I had just worked a little bit harder, then I could have succeeded in this thing. What a like horrible regret, I feel like. So I'm gonna work as hard as I possibly can. I'm gonna have like boundaries in place to make sure that I'm also giving to myself and my family. But I will never walk away from an unsuccessful situation and think to myself like, if I just worked a little harder, the outcome would have been better. I wanna take that off the table. But yeah, I think it's a weird new expectation of large rewards without the commensurate effort for those rewards.
Henry, what's your biggest regret today?
Biggest regret today? Look, first of all, it is really hard to look back on the last 15 years and like have nothing but an incredible amount of like thankfulness and gratitude for what's gotten me here. And so like, is there something that I would do differently along the way? There are things that I would have changed to make things easier and better along the way, but it's hard to have like a real regret. You know, I actually think I'd be like kind of an asshole to sit here and tell you like, hey, I've got these big, deep regrets. The easiest one, Harry, I'm certain is I have not given myself a chance to like appreciate what has happened here and the success that we've had, and like there's no nostalgia in it. It's always just like marching to the next thing. So like the minute the IPO happened, it was like, whew, great. Now I got to figure out how to do this for a decade. And so like, and that's kind of like how every moment of success, we bought our biggest competitor in 2017. It's a company that I woke up every day for 10 years wondering about. Searching Twitter to see mentions of, searching LinkedIn to see mentions of. Every day, first thing, boom, what are they doing? And we bought them in 2017, put the companies together. It was a great, successful acquisition. Today, people are like, how did it feel? Like, how did it feel? You know how it felt? It felt like a panic attack. Like, that's what it felt like in the moment. Like, really nervous. Like, how do you do it? Like, am I going to do it right? How many mistakes am I going to make? And so it would have been wonderful to have moments of like real, like deep appreciation for the success we had along the way. I haven't had very many of those.
Do you worry that you just won't be happy though if you never get off the treadmill? Like if you told me the things I'm doing now, I would be like, oh my God, amazing. But now I'm just like more. It's never enough.
Yes, totally. I think I don't view actually getting off the treadmill as a means to achieving that. I think it's just something we have to figure out how to do within our own like minds and our frameworks. And we should be good at gratitude journaling. We should be good at thinking backwards. By the way, I hate, like that's my first.
Gratitude journaling, Henry.
Watch this. Give me 2 minutes and 30 seconds and I can get you on board. You ready?
Yeah, hit me.
I hated this stuff. I thought like basically if you tell me to gratitude journal, you might as well also tell me to drink kombucha every like couple of hours and like sing Kumbaya melodies at like multiple breaks throughout your day. It was just BS, right? And there's this book that was written by a guy named Sean Acker. He's a Harvard researcher around happiness. They have a happiness lab. And the book is called The Happiness Advantage. He spoke at a conference. I got the book. I read it. If you read it, I guarantee it'll change your life. Maybe I don't guarantee, but it changed mine and the way that I think about things. And here's the big premise. The big premise is teams that are happier, people who are happier, way outperform unhappy teams and unhappy people. That happiness is actually the biggest advantage from a productivity perspective in business. And think about all the stuff, Harry, that you do to get an advantage in business. All the little things, all the big things to get a little bit of an advantage. And it turns out happiness is the thing that drives the biggest advantage in business, and it product of it is that you're happy. It's like, what could be a better productivity advantage? So he went and did a bunch of studies. One of them, they took 2 control groups of people. And in one of them, they said, you gratitude journal every day, 3 minutes, write down 3 things from the day before that you were thankful for. And not like, I'm thankful for my health, I'm thankful that I have food, but key moments in your day that you are thankful for looking back. And if you do that for 21 days, what happens during those 21 days is that your brain actually creates a background screening application. And so while you're doing it, your brain is learning how to recognize those moments in the moment. And so instead of having to look back after 21 days, your brain created an application that just notices it in real time. And all of a sudden, you're much happier because in the moment, you're appreciating those moments of gratitude. And I did it for 21 days. I did it for longer. It definitely works. You definitely are much more appreciative of the things in your life. And I think like that is just one of those things where, because it gets explained, by the way, mostly by these anti-hustle, like kombucha drinking world, it gets underappreciated when it's actually really valuable.
I totally get you. I find it slightly ironic having just had the conversation about you struggling not to appreciate things. Yep. You're like, gratitude journaling, baby. I love that. I will give it a try, and I will be open-minded. I will do a deal with you now. I'll do 21 days. There we go.
Do 21 days. You know what's cool too? I can go back and see what was going on. Like the things I was thankful for 4 months ago are actually pretty cool to read today. So there is a lot of advantage to it.
People were buying software then.
Yes.
Recession now. That's so funny. Man, I have to ask this because it is an amazing opportunity. You know, you have such a fascinating purview being where you are. And, you know, when we look at the market today, it looks concerning. Yeah? Yeah. What are you seeing in overall buying patterns? And how do you think 2023 will look?
Yeah, so I think the biggest thing we see today is people are rationalizing spend in a way very different from 2021 or even the end of 2020. And I really believe that there wasn't like a COVID pull forward for our business and many other software businesses. But what did happen was that there was a tremendous amount of money in the economy that the government put in the economy in late 2020 or early 2021. So decisions about spending that money were very different in 21 than they are in 22, or, you know, from kind of after the first quarter of 22 is when we started seeing it. And so today, or in 21, let's say you have a sale to a mid-sized technology company. The way that the renewal would work is we'd send over the renewal paperwork to our main point of contact in the business. The main point of contact in the business would say, great, thank you for sending this. Can we actually add 25 users? We're going to grow into that. Great, thank you. We send back the invoice, signed, done. Your renewal's done. You're off looking to upsell other clients and get your other renewals done. Today, that same renewal actually feels like this. Here's your invoice. Okay, thank you. We have to go take this to my VP and SVP to get this approved. Can we meet next week to discuss putting together a deck? Get me these stats on usage, get me these stats on ROI, and then let's go to my VP and SVP and present it. Go to the VP and SVP and present it. VP and SVP go, okay, great, super helpful, thank you. We're approved on this thing. We've got to take this to the CFO to get it approved. Can we build a deck and take it to the CFO? Then we go and take it to the CFO. CFO goes, great, thanks, approved. Sometimes in the bigger companies, you have to go to a global CFO, but that is happening in all of our businesses. In every software business, that's happening. When people say elongated sales cycles, which every public software company is saying they're experiencing, that is what an elongated sales cycle means. Now, how does it manifest in your business? You know, our business, to have a high net retention rate, we upsell into the client base. We sell more users, more seats, more functionality. And we run a really efficient go-to-market motion, the most efficient go-to-market motion in software, which means there's not a lot of slack in the rope. And so when all of a sudden the same renewal takes 30% longer, you lose your opportunity to go and find other pockets of opportunity within your accounts to sell to. And so that greater scrutiny, it's hurting efficiency and velocity. And I don't see that, I'm hopeful that by mid 2023, people understand like what the normal operating environment is going to be like, and that it softens in the back half of 23. But I don't anticipate it does until then.
The one thing I really want to pick up there is you mentioned in 21, they'd also say, hey, and can we add 25? Now they're cutting most of their teams as well. Are you seeing that in terms of the seat churn, just not because of the product usage, but just because of team size reduction?
Yeah, so not typically, but by like 99% of our accounts, we're not wall to wall in those accounts. And so we're, much less penetrated within an account. And so the chance that the cut actually hits our user base is unlikely. But what I will say is that there is a lot of focus on the usage of the seats. And so if you bought 25 seats and you really only provisioned and used 20 of them, no one's going to hope for the 5 to get like used in the upcoming year. They're just going to cut those 5 out. Yeah. And so that's happening for sure. The other thing I would tell you is like we sell to sales departments, marketing departments. And even if there is a layoff of a SaaS salesperson, I don't see them not like struggling to get another job. Like there is a very strong environment for hiring software salespeople today. Any of my salespeople have 7 recruiting offers in their LinkedIn InMail today. And so I think what people may be laid off of their existing software sales job, but they're going to land in some other sales job, probably in software. At least today, you're seeing that happening. I anticipate that continues. There's a really tight labor market for software salespeople, so I don't see people sitting on the sidelines very long.
Have you had to change your org chart to accommodate the elongated sales cycle and also the increased requests from customer bases on data, on usage, on ROI? Have you had to change your actual structure as a business?
Yeah, totally. Like we had an overlay sales team that sold our sort of advanced and additional emerging products and functionality. And we ended up taking that team and instead enabling all of our sales team to sell that advanced functionality, and taking that team, it was a decently sized team, and then embedding it, pushing it back into the business and saying like, we don't need this overlay team. We'd rather give more slack in the rope by giving our account manager, putting more bodies, more quota on the street, and lowering the number of accounts our account managers have today so that they can continue to drive similar results as they were able to last year. We took a team of, call it a couple dozen SDRs who, when you looked at the leads that they were processing, turned into very little ACV on the other side. And so we said, look, let's self-service those leads, put them through automation. Let's take these couple dozen SDRs and let's build a renewal team who can handle sort of low to no touch renewals, so the account managers don't have to focus on that, can continue to focus on upselling and selling through their different businesses. So yeah, we've made a number of tactical changes to account for that.
December 2023, okay, I will have done my gratitude journaling with my kombucha. I'll be very grateful for life. And we're going to be asking the question, is it going to be better in December 2023 or worse?
I am of the opinion that it will be better because it will be normalized. I think today there's just like a bunch of panic-induced decision-making that's not thoughtful, but just says, hey, troubles are brewing, so just stop doing a bunch of stuff, and it's sort of haphazard. I think 23, at the end of 23, I'm confident it will be a better selling environment than it is today.
Is it a pain in the ass being a public market CEO in this environment? I mean,
yes.
Yeah, just because like you have to communicate every little thing, and it's like, yes. If it was private, you're like, guys, it's shit, but we're going to get through it in this way. Now you have to be the politician.
There is no question a tremendous amount of upside to being a public company. from a validation perspective, from an enterprise customer perspective, from an investor pool perspective. So don't hear me wrong about that. It is great for the company to be a public company. For a CEO who goes from a private company to a public company, as a private company, I had 2 private equity firms on my board. One had before we went public, one had 6 years of operating history with me. The other had 3.5 years of operating history with me. They knew me really well. They knew how I made decisions. They trusted me. They trusted my integrity. They trusted how I made decisions about hiring and firing and strategy. We were like very close confidants, basically. And then you become a public company and you have hundreds of investors, probably 40 who are really important long-term investors and shareholders, and they don't know you. They met you a couple times during the roadshow. They don't really trust you because they're not in the trenches with you. You talk to them once a quarter to tell them the update after the earnings call. They all have different questions. They're all dealing internally with their own stuff, their manager is asking them questions and then they don't know the answer. And so they want to ask you a question. And so there's this big constituency to manage that's different from when you're managing just 2 private equity shareholders on your board as your constituency.
I totally get that. Can I ask the other question, which is morale in these times is tough. When team members come in and they see that actually their stock is worth considerably less than it was yesterday just because of the fucking market. How do you think about managing employee morale in volatile stock price environments?
Yeah, I think, look, first of all, people have to understand what is going on, which they don't, right? There isn't a fundamental understanding of how the stock market works and what's happening. So, if you track our peer group, there will be a day where our peer group goes up 7%, and there will be a day where our peer group goes down 7%. And those days don't matter at all, right? They are just the market's doing a thing, and I'm not ever going to pay attention in any situation where we're not, where we're in line with our peer group. It's when we fall outside of the peer group, which is usually around earnings time, where we will either go up or down relative to what the peer group is doing. The employees don't know that's how it works. And so they're oh, I think it's the shorts. The shorts, there's just a lot of shorts on this thing. Or, hey, do you know what happened? I wonder if there's a thing that happened and that's what's taking it down or up. So the biggest thing is you have to first of all explain, this is how the thing works. You get valued on growth and profitability over time. It's our job to execute on the strategy that we told the market we're going to execute on. That's how we get rewarded, is we execute well for a long period of time. They have to understand those fundamentals. So I'll send out emails that explain that. And we had an earnings call where we reset guidance for 2023. And the day after, the stock dropped differently than the rest of our peer group. And people still didn't totally understand why. And so I spent the next week just kind of building a communications plan to explain here's what happened. Going into that earnings report, on a relative basis, we were the 3rd most valuable software company in the world from a valuation perspective. Snowflake, Cloudflare, us. And so there is an expectation of perfection. And so if you show up with anything less than what can be perceived as perfect, and by the way, we grew 46% with 41% operating margins. So look, we showed up good. We just didn't show up perfect. And in moments where you don't show up perfect and perfect is the expectation, this is what happens. Here's the stuff we're doing to address that. And here's sort of what the chart looks like today after that drop. So I think a lot of it is actually education around it.
Can I ask, we all have egos. The thing I get upset about when I look at ZoomInfo is I'm as you just said, the 3rd most valuable. No offense, not as famous a brand as Dropbox, as Box, as some of the darlings who've been on magazines. Do you ever go seriously, we're here smashing it, bringing big dollars in, killing it as a company. Where's our fucking love? Do you ever feel that? And does that ever hit the ego?
There is no benefit in feeling that. And so the way that I think about it is that the people who matter know. And I actually think that you can quiet a lot of noise when you get upset about just about anything like that. If you just think about, like, do the people who matter know? And if the answer to the people who matter know is yes, then nobody else really matters. And you don't get worked up about the universe of people who don't matter. You should be focused on the universe of people who do.
I totally do. I think that's probably why you have a healthy mindset and I see a therapist so often. I do want to ask one final question, then we'll go into a quick fire. And it's just, circumstances change, financial profiles change. We chatted a little bit before about it, but how do you think about your relationship to money today? It's one I think about and struggle with often.
How do you mean, Harry, my relationship to money?
So, like, I always thought that money was everything, actually. And then it kind of was. I got it and I was like, oh yeah, it does make you happy. And then, you got to a little bit more and you're like, with, 4 or 5 million, I'm not like much more happy than I was with 1 or 2. Like, actually, I just kind of like hanging out with my mum and my brother. And it's this kind of awareness that it does to a certain point and then it doesn't. And then it really does again when you can buy the Gulf Stream. But there's that middle ground where it doesn't. And that's why I struggle on it.
Yeah, so let me talk about the Gulfstream thing because I think it's interesting because I can afford a Gulfstream or a plane, and I don't have one, and I don't fly private very often because I think at some point when you get to that other point, you're making more values decisions than you're making like spending decisions, and it's very hard for me to square my values with fly back and forth to Boston, it costs $100,000. Like, that's just like, it's just very tough to say that that's the best way that I should spend $100,000. And so I've never really been able to rationalize the spending on like a private plane and probably a lot of other things underneath that. Here's what actually happens with wealth. You have a limited amount of time. And so you can't do everything, right? There's only a certain amount of things you can do. Like, I'm not on vacation for 12 weeks a year. And so I can't, like, it doesn't make any sense for me to have multiple vacation houses or a yacht or any number of things. There are things that there is a set amount of time that I'm going to have to go on vacation or really just like spend my money. And so what you end up doing is funneling sort of your energy around those probably 3 or 4 times a year where you can have a big experience. And they're just not that expensive when you go do those things. You don't need hundreds of millions of dollars to have a nice vacation in a nice hotel somewhere. So my relationship with money is that I expect it to provide cool experiences for me, and I will use it as a resource to provide great experiences for me. But those experiences are always sort of tempered by value-based decisioning.
I have to be honest, I really love flying private.
I don't know. Maybe that's part of it. Like, in and out of a very tough place to get in, I get it. Like, flying cross country when there's a JetBlue plane going the same place, I actually prefer first class in a commercial plane.
Okay, Henry. Well, that was one to discuss. Listen, my friend, I want to dive into a quick fire round. So I say a short statement, you give me your immediate thoughts. Does that sound okay?
Yes, it sounds great.
Okay, so what's the favorite book and why?
The Happiness Advantage by Sean Aker, because it changed the way I think about happiness as an advantage in business and made me a happier person.
You've really sold me on this one. I'm actually writing down Sean Aker.
I'm going to send it to you anyways. I already wrote it down.
Oh, you're too kind. Thank you. I'll send you a Gulfstream. What's your? I've lost that battle. What's your biggest strength and what's your biggest weakness?
My biggest strength is that I'm a great communicator, written and verbal. My greatest weakness is that often my passion for any topic may come across as anger or something other than being really passionate about a point.
Yeah. Mine can come across as arrogance. It's got me in trouble before. Tell me, what's your biggest mentor and what have you learned from them?
I would say my biggest mentor is a guy who's on my board, Todd Crockett. He's been on my board since 2014 from TA Associates, and he taught me how to think about creating value in business and how to lay out, how to communicate how you're going to create that value with business writing in a really cohesive way.
Who's the best board member and why?
Todd's a great board member. I will say right now, the person who gives us the most insight is a guy, Mark Mader, who's the CEO of Smartsheet. Mm-hmm. Yeah, he's really great because, oh, you've had it on the show. Okay, awesome. He's great because a lot of the things that we're dealing with, Mark maybe dealt with a year ago or 2 years ago, or he's just like has a really unique insight on running a software company. And so he brings those insights to bear, and he's always the person you're like, hey, Mark, can you tell me what you think about this? And he always has an insightful perspective.
What's your biggest guilty pleasure?
Cheeseburger. I'll eat fast food. Like I don't have any control over cheeseburgers.
Do you have an exercise routine?
Every day. I work out at least 30 minutes every day.
What do you do? Run, bike?
I usually run like 2.25 miles, and then I do some set of strength training, push-ups, sit-ups, bench press, something like strength after that.
Do you get up early?
I do get up early, but I get up early, I take a couple of calls, then I take my daughter to school every morning, and then I come back and I exercise them in the office at 10.
What do you want your legacy to be?
Let me answer this in a little bit of a different way. If there's a time where I'm not here, I would like people to say he was a really great person.
I like that. What do you believe that few around you believe?
That if we work really hard, our potential continues to open up and open up and open up. And maybe said another way, I believe that if you get the right people around you and they're all committed and hardworking, that you can outperform and outachieve anybody else in front of you or around you.
I love that. I don't know if I agree. I think you also need to be really good. Some people say that to me. I'm like, I don't know if you're good enough.
That's fair. You also have to be good.
Penultimate one. What would you most like to change in the world of SaaS?
That's easy. I think that the way companies go to market is really inefficient, and is that growth is solved by adding more heads and not adding better processes and systems for go-to-market. And I'd love to see a more forward-looking and thinking and sophisticated go-to-market motion in SaaS.
December 2027, so 5 years' time. Where's Henry then, and what does the world look like?
Henry is, assuming I can continue to do my job well, Henry is still CEO of ZoomInfo. And he's really happy, and the company is growing 30% a year over year. And the world of SaaS, I think, is back to really fast paces of growth or rates of growth.
Henry, I've loved doing this. Thank you so much for putting up with my shit questions. But it's been so much fun, and so really appreciate you joining me.
Awesome. Thank you, Harry. Thank you for having me. I really appreciate it.